Good morning, everyone. Well, good day, I should say, because it's morning in Chicago, but it's not elsewhere. Got to think outside of ourselves. Thanks for joining me again. It is Monday, the 28th of January, 2019. It's 8:02 a.m. here in Chicago. We have about 6 inches of snow. What is that, 15 centimeters or so? Interesting trek into the gym this morning. Very cold. Anyway, it's beautiful. Everything's snow covered. Very, very beautiful. But it'd be nice if I were somewhere warm. And I will be in a couple of weeks. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off. The market sentiment overall is pricing risk down. And we see that crude is leading the pack down $1.17 on the March contract versus Friday settlement, trading at 52.53, down 2.14%. The Nasdaq's also down. The Nasdaq just got out of yesterday's range again. It was holding pretty well compared to the S&P on a relative basis, on a relative location basis versus the prior day's range, which is a very important gauge of what we're trying to do. So the leaders down again are, we'll call them laggards, I guess, crude oil, Nasdaq, Dow, and then the Euro stocks, the Russell, the S&P. The leaders, the strong ones, we have a small pop in the volatility index. Futures up about 3%. The yen is up 24 basis points. Gold is up 8 basis points. The interesting thing here is the bonds are down a tick and the 10 years are down a tick as well. So risk off, but we're not seeing money flowing strong into the treasuries or to the safety assets. Gold is below the 1300 century figure. Gold had a big day on Friday, big pop. I'm sure many of you saw that. So that's the overall sentiment. Looking ahead at our calendar, there really isn't much for today. There's an ECB, the ECB's President Draghi has a speech at 10 Central, 11 Eastern. But other than that, not seeing very much. In fact, I think Draghi's speaking now. It shows him twice on the calendar. Speaking now at 8 a.m. Central. So that's, well, let me turn that off. Oh. Sorry about that. So that's where we are. Let's take a look at what we expected on Friday versus what we actually got, because there's no sense in making plans if we don't go back and review them and improve on them. The primary scenario on Friday is a likely drift down, and then a strong potential for a push up to take the overnight high out. At the time, the overnight high was 26.61. My expectation is a push to 26.76. 26.76. I expected it to get tangled at 26.71.50, and then to go sideways on Friday, leaving a gap behind. That's the primary expectation. The secondary is a push through the overnight high. If you recall, Friday coming into the day session, Globex left us with a P-shaped profile, and it looked like it was ready to push higher. So we're looking on a secondary scenario for a push higher and then reversion back into the prior day's range, pushing into the 44 area or so, and then bouncing back up and then going sideways into the weekend. Here's what actually happened. Not much, really. So when we look at what we've got here, we opened up right where we had left off in the trader by 26.61 and a quarter. We did sink down into 26.56. Remember, the primary scenario, here it is again. Primary scenario is to pull back to pull back into the overnight point of control 2653 and then pop in over the overnight high and get up into 71.50 and eventually 76. And again, the overnight point of control 2653. The drop wasn't all that much. So we opened at 61, dropped to 56.50, so about 4.75 points. And then from there, it pushed through the overnight high that day, and it got to 72.50. We did tangle up with the 71 right here. The 71.50 was the area that I showed that we're likely to get tangled up in. That's the weekly close. We tagged it almost to the tick, or actually exactly to the tick at 71.50. Pulled back to the mid. This was the first initial clean setup for me. Pull back to the mid, looking for an extension. We'd already extended the range higher, and we are initiative leaving a gap zone, but after the first hour. So this is another important statistic. We left a gap zone below after the first hour. We have a range extension up, and so the expectation is for at least one continuation higher, and that's what we got. Could not get into the intended target or the expected target before it sold back off through the mid into the open again, and then just sideways crap fest from there. Okay, and what we did is for the market to prove me wrong or to show me who's boss again. I talked on Thursday morning about the fact that we've been getting a lot of serrated profiles, and we hardly ever see rounded profiles or normal distribution profiles. So on Thursday, the market gave us a balanced profile with a very clean, clear shape that tells us that it's in balance, and then we gap up, and then we get another perfectly balanced profile on Friday. Of course, you know, I don't have an ego big enough to think that the market's just doing its thing to prove me wrong, but it's just, you know, it's just comical. Anyway, so what we did is we popped up, but we ended up balancing. So in general, when we pop up like this, we tend to push to become initiative away from the balance that we've had over several days. So when we combine these days down here, we could see that, you know, it traded back and forth, and we have inside days. The last day was an inside day with a break higher, and you can see that the profile here is fairly balanced looking, with the point of control at 36.50, and then we moved away from that. And in general, when we do that, when we pop up above balance, especially after an inside day, we tend to consolidate very quickly in the morning, and then we tend to go into imbalance and push. And what it did was to pop up higher and just go completely balanced in this distribution right here. So if you look at the bottom, this 56.50 area, it's just below the low volume node of the last time we were here. Remember, we use this as a template day. So the this day here, the 18th, I believe, the 18th, I removed the 21st because of the holiday. The 18th becomes our template day, and you could see that we basically traded this. We've attempted to trade this range back here from the 18th, and I would have expected a push and a breach of 76.50 would have likely squeezed more shorts out and given us a trend. But what it did is it popped up, looked initiative, left a gap behind, but was balanced. So what this says is that, what this likely says is that once it got above there, there was little interest in a further push, and so the market didn't really see the participation that we would normally expect, and now we're rolling over. And so what we did is we accomplished a very kind of shortened version of scenario 1, but never actually followed through. Here's what we've done since. Let me kill these stock zones. Here's what we've done since we've reopened. We tested the close of the prior day, the prior session, and then we have been selling ever since. The inventory overnight is almost 100% short, and we are trending down. The profile is double distribution with a break lower just now. And when we look at this on book map, we can see that it's really running away here to the short side. The areas that do have liquidity, this is not a good color for this particular product. Actually, let me just switch this out while I have you here real quick. Okay, so this represents the last price, this blue line that I just put in. And what we see here is wherever there's a little bit of liquidity even, we just have a collision and we push through with a minimal pullback. Generally, the habit is we break, bounce up, push through, pull back to that collision area for continuation. This is a pretty aggressive selling spree. You can see that the delta is moving down as well. And we are below the gap that we left behind on Friday, and we're taking back a lot of what was accomplished in the Globex session coming into Friday session. Looking at the liquidity above and below with full depth here, we can see that there's a little bit of liquidity that's building up right in here. It's been here for a while, so you could see that it's not new liquidity. It's been holding. I expect there's likely to be a fight here, but we're back to the MC point of control, the MC VPOC from the balance days. We're coming back into the bigger balance that I was just talking about. Again, that's built on combining these days. So we are coming back to this balance price right here, this black line. So we're coming back into balance. We've tested above and we've come back into balance, and this looks to me like it is likely to push through today to test the other side. I'm expecting around 2618-ish to be the next key area down. Okay, so what are we looking for today? Let's get into what's expected today. Today, for the current session, I'm looking for, let me do that again. So these are my stock zones. What I'm looking for today, we're back in this balance area. The primary scenario is likely to be this this reversion back up because we have been pushing down. We're coming back into balance. I expect the open to be choppy. I expect us to continue to push the overnight low before the session opens in 15 minutes. And then I expect us to chop around in here early. I'm expecting it to push back up, get tangled up here in the 40-50. 40-50's played quite a bit over the last week. And then an attempt higher that eventually gets smacked down. And then I'm looking for it to push through this 3250 area and then return back before the close. I'm expecting the range to expand from what we had on Friday, which was really dismal compared to to recent volatility. But I am looking for a reversion up. I'm looking for the market to balance out just a little bit towards the overnight point of control. But I'm looking for it to continue lower. I mean, we've made a very valiant attempt higher, and here we are back. So we put in a lower high on the daily versus that 7650 area, and we are back in balance. So crosswinds, a lot of chop is likely to ensue. Secondary, open up, continue lower, and then push higher, consolidate, and then start to take back and head towards the gap to push to potentially gap mid. Gap mid would be extended. The main target would probably be around 47.50 or so. And then I'm expecting this to play both sides. So I'm expecting it to form a balanced profile with a break one way or the other. I expect a trade from the outside in today. We are back in balance. We have tested above and have failed to hold those prices. But overall, I'm going to be looking for extreme extensions. In other words, the market to move in a direction very quickly, pull back, try to continue, and then use order flow to trade in the opposite direction if we get scenario 2. I'm not looking for a trend today. We did pop up, came back. We are back in balance. We're likely to chop around today in here. Likely. Okay. So I can't read the future, as you probably imagine, but this is what I'm expecting. The fact is we tested higher. So what has the market done? It has tested higher. It has found that there's really little interest, put in a rounded top, and has come back into balance. Okay, that's the big theme here. That's the narrative. The narrative is we balanced. We spent several days bouncing around this 36.50. We gapped up, and then we gave it a good, valiant, try, a good, good effort, and then we just couldn't push through. And now we're rolling. We've rolled over. We've come back into balance. So we've tested the upside. And we are likely now to continue to advertise prices lower to see if we can entice buyers to come in. And so we're likely to test the downside. Okay. But there is an imbalance here, so I expect it to push higher a little bit on the open. But overall, I'm looking for scenario 1 to push lower. But it's expected to be choppy given that it's back in this balance zone. So I'm layering this on. It's like cake. Okay. So I'm layering what's happened in the last day with what's happened overnight, but also I'm looking at what has happened in the microcomposite, which encompasses the 4 days of last week. Where are we? One of the key questions to decide on context or to read context is where are we versus yesterday versus the last time we were here and what was happening the last time we were here. That's how I determine context and get prepared for what to expect next. Okay. I want to remind everyone also that there is a public AMA this Thursday at 4:30 Eastern. It is on the website that is associated with this link, and it's also on my Twitter feed, twitter.com/FutureStrader71. If you want to register, if you can't attend, it's okay. Just register, and you'll be sent the video. Okay, no spam. Good luck, and I'll catch you tomorrow morning. Take care.